Hello, everybody. Welcome to Trading Mindset. Thank you, Hopium Jesus, for getting in here nice and early. Today, we're going to go through yet another lecture. This is going to be the 8th lecture in the series on not only the emotions of trading, but also how to manage those emotions for long-term profitability. So let's go ahead and start nice and slow today. I think we're going to try to get through the lecture part of the live stream a lot quicker this time, because these live streams for the past maybe 2-3 weeks have been getting a little bit long, an hour and 20 minutes. And I know a lot of people want to get to those giveaways nice and quick and the chart analysis at the second half of the live stream. So we're going to try to get to that just a little bit quicker this time, a little bit quicker this week. Some updates while people start to file in, especially for the people that are watching the recording of this rather than watching it live. There are 2 giveaway winners that we have yet to either be able to get in touch with or we haven't been able to find. Those are going to be Ace Tylene on Telegram and Olumide Broski on Telegram. So if you are either on YouTube and in the chat, or if you are on Telegram or Discord, go ahead and join either the Bybit Telegram or the Bybit Discord and reach out to either me at Brandon Zayats or Kilo at Kilo, and go ahead and just let us know that you won the live stream. We'll check it against your YouTube name, and we'll check it against the name that was provided the first time, and we'll make sure everything's congruent there, and then we'll make sure to get you those rewards. So everybody that has won so far, the last 3 or 4 winners, the process for distributing those rewards has already started, but just a couple people that we haven't been able to get in touch with because the names provided, maybe it was off by a letter or off by a number or something. But Ace Tylene and Olumide Broski, we'd like to get you your rewards. And just reach out to us on either the Bybit Telegram or Bybit Discord there. How's it going, Oluwaz? Andy, a veteran winner of the weekly giveaways. You haven't received it yet. So yeah, it's going to take up to 20 business days to receive those. So it's a little bit slow to actually receive them, but you will get them. Just expect that. If you do win, you're going to have to be patient. It's going to take at least a few weeks to actually receive those rewards. But let's go ahead and start the live stream with our Trading Mindset lecture. This is going to be nice and quick this week, so we can get to those chart requests, because I've noticed that over the past few weeks, we've only been able to do maybe 2 or 3 chart requests. I want to be able to do more than that. And everybody's recommendations. I'm going to check the Discord real quick just to see if there have been any recommendations this week, and maybe we can do those first. Maybe we can do a few of those and then get into the lecture, but it looks like we are free and clear on those. So let's go ahead and get started. We're going to cover Donchian channels first, which I think is really interesting and something that I've actually discovered quite recently. I'd probably say within the last 2 or 3 months, and have actually been using them, which is kind of surprising to me for a new indicator. I usually don't find new random indicators that are entirely useful. A lot of times they're just convoluted or more complicated, or just combined versions of other indicators, simple indicators that you should be using, like a moving average, with some other random volatility indicator. But Donchian channels have actually been quite interesting. So I will show you guys an example of how those look on the chart in just a moment. But let's first go through kind of the material and the textbook definition. So Donchian channels were developed by Richard Donchian, as they usually go, John Bollinger Bands, and depict local absolute high and low prices based on a period input. If the input is set to 20, as it is by default, so whenever you open it up on TradingView or Coinigy, it'll be set to 20. The upper bound will be placed at the highest price traveled to within the last 20 periods. So what's the highest high for the last 20 days or the last 20 weeks? Open up your Donchian channels, set it to 20, and you'll see that kind of drawn as a bar throughout that entire time period, or for matching up to the current day. The lower bound will inversely be placed at the lowest price. So what's the lowest low within the last 20 days, the last 20 periods? It'll show up in terms of your Donchian channels, and I'll show you guys that in just a moment. So the area plotted by a Donchian channel actually represents market volatility. It's kind of the classical representation. If you take the entire area, so length times width, you'll get kind of a block in that area itself. If you compare it to another area, you can say it's either higher or lower in terms of market volatility, but a lot of the times we don't actually use that because that would be complicated to calculate if you actually did that every single time on your chart and compared time periods. I'm sure people have created algorithms for that. But it's also implemented by trading systems dependent on identification of time-sensitive higher highs and lower lows. So whenever I say trading systems, I'm not sure if I've defined this in the past. A trading system would basically be a strategy, a trading strategy. So you could say a trading system is whenever we break above an all-time high, I'm going to buy in. I'm going to set a sell target at plus 10%. That would be a perfectly viable trading system. And I'm sure there are a lot of people that actually use that and succeed with it. A lot of people use trading systems that identify and open up trades, especially long side trades, above all-time high levels or even local highs. So personally, I'll use the Donchian channels to just quickly identify higher highs or higher lows within a specified time period, but it can get confusing and it can kind of give you false signals and give you false confidence in an area of the chart or what would look like a support or resistance that actually doesn't have a lot of significance whenever you're talking about real support and resistance. So always use those existing support or resistance trend lines as well as price action itself, and make sure you're on your target timeframes for primary significance of support and resistance, and don't just use a Donchian channel independently. So let's go ahead and move over to the chart and let's actually add it to this Ethereum or Ether to US dollar tether chart. First, let's go up to the top, click on indicators, just type in Don, and we've got Donchian channels. We're going to click on it once, and it's going to add the Donchian channels. Let's make sure we're on the daily time frame. That'll be the easiest to explain. And it is currently has a default input of 20. So if you click on the little gear icon here, you can change your inputs. We're going to keep it on the chart time frame. You can use this to kind of make sure you're congruent, but we're going to keep it on chart. Basically, if you wanted to make sure that we were always looking at the daily version or based on the daily inputs, even if you move into the 1 hour or the 4 hour chart, then you can move this to 1 day. But we're going to keep it at chart, and it's going to change based on whenever you change your time periods themselves. And we're going to keep it at a default length of 20, and I'll show you guys what it looks like whenever we change that. I can do it real quick. So we're at 20, change it to 100. Instead of analyzing the past 20 periods, we're now analyzing the past 100 periods. And so if we look through here for the past 100 days, because we are on the daily time frame or the daily candlestick time frame, whenever we look at our very current price, so the exact candlestick we're waiting to close right now, it's got about 7 hours and 52 minutes left. If we go up to the top end of our Donchian channel, this price right through here at $3,576 is the highest high, the highest price that we've seen for Ether to US dollar tether within the last 100 days. So the highest price we've seen is $3,576. We move back 100. We count up all these candlesticks, and the highest price that we've seen is right through here. So the exact time we saw that price was April 3rd. And if we go back another, 80, 90 days, we don't see a price above that. So this is going to act as our highest price for the past 100 days from the current candlestick. Now, if we move back and we say, all right, well, what about through this area? What about on February 16th? What was the highest price back 100 days from there? We go all the way up to the top side and we make sure it aligns vertically. The top side of the upper bounds of our Donchian channel is going to be right around 48.73. And so if we counted back 100 days from February 16th, the highest price that we saw for Ethereum or for Ether was right through here on November 10th at close to $4,875. Same with the bottom side of the spectrum or the lower bounds. It's going to be calculated the exact same way. So for our current candlestick, our current 7 hours left for this daily close is 29.49 or so. But within the past 100 days, what is the lowest low we've seen? Maybe we use that to calculate if we want to open up a short side trade, if we can see a lower low, or you can just use it for a lot of different reasons. I'll explain a decent strategy in just a minute. So the lowest low we've seen in the past 100 days is 21.53. And we move all the way back to this area through here at January 24th on that daily candlestick. We did see that absolute low based on a bottom side shadow at close to 21.46, 21.50 or so. So we can move and actually just manipulate our input real quick called length and say 20. This is going to be a little bit more elastic based on our recent price action. So most recent higher high or highest high within the past 20 days from here is right around 35.90, and that aligns with this area through here. So how can this throw you off actually? Because it does look pretty pretty useful because you can quickly identify, all right, what's our highest high, what's our lowest low. How can this throw you off? Well, it can throw you off depending on your input set. So with an input set of 20, we are only actually looking at those last 20 days. If with an input set of 100, only the last 100 days. But depending on your time frame, you may want to be looking at a longer time period or price action that's a little bit more historical. So or whenever you're set to the 20-day input length, you're going to be looking at only the most local price action. But say 25 days back, there may be an even lower low that's more important than our lowest low from the past 20 days. So you really have to make sure that whatever your input is set for your Donchian channel, it also aligns with the pair or the coin that you're analyzing, because it's not going to be universal. You're not going to be able to set your Donchian channel to an input or a length of 20 and build a strategy around that works on every single pair or every single coin. You're going to have to make sure that you're on a specified time period. You're setting up a strategy itself. You have to make sure that you have, let's say you're only looking at the 4-hour time frame, and you're only looking at a time period of, the previous 10 days or a total of 10 days for a shorter term trade. You have to make sure it's very specified. You won't be able to set your Donchian channels to a length of 20 and use it for short-term trades and long-term trades and short-term or intermediate term long side trades. Every single trade you want to open, you want to be able to, or you're going to have to be very specified to actually build a trading system or a trading strategy around it. Now, how it can be useful, very evidently, is just by taking a very quick look at your chart. So let's say you have your Donchian channels open on your chart for the last 20 days. It's going to be nice and elastic to some of our price levels, and it's actually going to give you some pretty good zones for whenever we saw our lowest lows, and you can almost identify them as a moving average or a nice kind of softened version of a moving average of ranges for our higher highs and our higher lows. So you take an immediate look at the chart, and without even looking at your candlesticks, you can say, all right, so this is the lowest low for our intermediate term time frame. Here's our next low. Our next low, we have to move up, but now you have to look at your candlesticks themselves. So it can be useful for very quick, very kind of flash looks at your chart. If you're just going through your charts over and over and over again, you can use your Donchian channels to kind of measure volatility, kind of measure the whether it's a trading range or a triangle like we saw through here. Are we seeing a tightening of volatility, almost like you're using Bollinger Bands, but a little bit less softened, because these are absolute levels and it's not as much of a moving average as it is an identification of our higher highs and our higher lows. So it can be very useful, but yet again, you have to make sure your strategy works with it. We don't see any chart. Oh my, I'm so sorry, guys. I am so sorry. Okay. That is my mistake, guys. Ooh. Okay, Donchian channels. We're going to do a very quick run through. I guess that was kind of the explanation. This is what Donchian channels look like. I'm so sorry, guys. We changed our settings. This is the current length of 20. You can see how it identifies our higher highs and our higher lows. So we go ahead, we take a look at our current time frame in our very current candlestick through here on April 22nd. And if we go all the way up to the top, or the top bound of our Donchian channel, because our input is set to 20 days or 20, and we are on the daily candlestick time frame, this top side of our range through here, our top bound, is going to reflect the highest high that we've seen for the past 20 days. So we've moved back, try to identify that high itself, and it's right through here on April 3rd at close to 35.79. Same with the downside. Where is our lowest low from the past 20 days? It's right around 28.74, and we move back to actually identify which candlestick that came from. It was the bottom side shadow of our April 18th candlestick. So that identifies our lowest lows, and hopefully the just narration that you guys heard did explain a lot of the strategy you can use based on this, but I will stay on the chart just a little bit longer and give a couple more examples. So there's the 20-day. We can move out to the 100-day Donchian channel. Basically, it's calculating the highest high and lowest low for the past 100 periods. So for our current candlestick time frame and our current price through here, we're currently at 29.43. But what is the lowest low we've seen for the past 100 days? We move down. Excuse me just a second. We move all the way down to the bottom bound of our Donchian channel, and you can see the lowest low we've seen from the past 100 days from today is right around 21.50. We track all the way back to that same candlestick that actually formed that lowest low, and it's right through here, the bottom side shadow from January 24th at 21.50. Same with the top side. This will identify our highest high from the past 100 days, which if you look back and you actually take those off, you say, all right, well, how am I going to identify our highest high? It's very obvious. You just draw a line right through here. But if you are, or you have a trading system or trading strategy that really depends on identifying higher highs or higher or lower lows for a specified time period, that's where Donchian channels are really going to come into play, because if you look at your current price, the past 100 days, you can, without the Donchian channels, just say, all right, this is our highest high within the past 100 days, but it might not be as easy every single time. And you may want to identify our highest high a few candlesticks back, or even, 20, 30 candlesticks back. You say, all right, our highest high was 41, 46. We track all the way back to our highest high. That's going to be right through here, and that's not going to be super evident or super obvious at a first glance without our Donchian channels. So that's where it's going to become very useful. I turned my imagination to next level. Thank you guys for bearing with me while while I forgot to click the button to switch over to Trading View. Excuse me for that, guys. 2 videos from before I left behind. Sorry, Brandon. No problem at all. I do try to make these not necessarily super linear. You don't have to watch, the first 5 to understand the next 5. That you do learn something different and not necessarily attached every single time. A few times, like we've seen in the past 3 videos, I've actually been explaining moving averages, first some mechanics, then a strategy with moving average crossovers based on price. And today we're going to talk about moving average crossovers based on convergence, so using multiple moving averages. So there's a little bit of connection there, but it's not going to be absolutely imperative. So it's okay. Thank you, Andy. I'd say that covers Donchian channels pretty well. Maybe we can try to use those as an example with some chart analysis at the end of the video. But yet again, trying to get through this quicker so we can do some giveaways. So moving average convergences. You don't need to understand moving averages at an extremely technical level to understand this strategy or this trading system. So let's go straight into it. Moving average convergences, also known as the double crossover method, that's kind of the technical term, occur when one moving average penetrates another based on a different input of periods. So you need to have at least 2 moving averages on the chart. They need to be separate. And you need to make sure your time input or your period input is separate or different, a different number. So for example, and most commonly we see a golden cross or a death cross. And for those, people tend to use either the 50-day simple moving average as well as the 200-day moving average, simple moving average, and try to wait for a crossover of those 2 indicators. Or people will use a 50-day and a 100-day. I'd say that the 50-day and the 200-day is actually a bit more common. So these convergences create the popular golden cross or death cross formations based on the 50 and 200 or the 50 and 100. But you got to make sure that it is the SMA for the classic death cross or classic golden cross. Although there will be strategies out there that prefer, or just traders in general, that prefer either a weighted moving average or an exponential moving average for those golden or death crosses as well. But you have to try them all out. So the textbook strategy states that a buy signal is produced when the shorter or more sensitive moving average, so in this case, it would be our 50-day moving average, crosses above the longer or the 200-day moving average. This is reversed or flipped for the sell signal. So whenever our 200-day moving average, actually, I'll show it on the chart because I'm confusing myself, but I'm going to make sure we see that chart. There we have it. Let's show some examples of a 200 and a 50-day moving average and the crossovers that we may see. Let's take our Donchian channels off. It looks like we don't have any moving averages at the moment. Well, we can put on our 150 and we're going to change that to our regular 50. That's going to be, let's just keep it blue. Let's make it a little bit thicker and we will zoom into the chart in just a moment. So if you ever want to make your lines thicker, you can go to Style. And you can change your thickness down through here. You can change your color. So we have a very obvious blue 50-day moving average. Let's go ahead and add a 200-day moving average. It's going to be a simple moving average, which is also the MA. I used to use Coinergy a lot, and the reason that I changed from, this is the EMA, down here, where'd it go? Did it add to the chart? Where'd it go? The reason I changed from Coinergy to TradingView was because I kept getting pop-ups about upgrading to like the next level. But now that I'm using TradingView, I'm getting the exact same pop-ups. Oh, it's because I have too many indicators on. All right, so let's take off this But yeah, this is the same thing. I was trying to, there's different packages for TradingView and Coinigy. I don't really have a lot of use for like the expensive packages because I don't have, a lot of the reason is it allows you to have like 8 charts at once within one tab. But I don't really do that. I tend to look at either 1 or 2 charts. So let's go ahead and change our inputs here for our moving average. It's the SMA, the length is 5. What is going on here? Close is 0. Okay, let's take everything off except for our 50-day moving average. We'll keep our Donchian channels on. Let's see. Okay, let's see what the difference is here. You guys seeing what I'm saying? So it's adding this smoothing. Can we take that off? Okay, well, let's just leave it how it is and see if that changes anything, that smoothing method. I haven't run into this issue many times. And let's go ahead and change the style real quick. Oh, there's a smooth, it's a separate line. Okay, so let's make it red and blue. And then let's change, can we add our thickness to here? All right, so now we have our 200-day moving average and our 50-day moving average. Our 50-day moving average is going to be very elastic to our local price action. We're going to see it react to all of these crazy price movements. Our 200-day moving average is going to be nice and smooth and just kind of reflect a slowing down or almost a inverse log in terms of price action as we're starting to settle down our bullish price action. So we're starting to see a little bit more sideways price movement, even though that's definitely not what we felt in the longest term. That is what we're seeing. So what is going to say, all right, this is a golden cross or this is a death cross? Our golden cross is going to be whenever so we actually don't have a perfect situation for this one. I don't know if it's because of the price action history. Let's move back. And it's just because we don't have an incredible amount of price action history. It only goes back to October of 2020. So we're going to go off of Bybit and we're going to go to, let's find an Ether chart that has a lot of price action history. I think we can go back to Bitfinex, should have a really good one. Should go back pretty far. Bitfinex, Kraken, usually have the most history if you're ever looking at that very long-term price action. So yeah, Bitfinex goes all the way back to June of 2016. That's crazy to see. So we zoom out a little bit here and we're going to try to identify some golden crosses and death crosses that aren't as vague as what we saw through here and with more examples than we've seen in terms of, only the past year or so of price action. So where would we find our classic golden cross or death cross? Let's go ahead and look through here. So first we have our golden cross right through here. So we have our long-term moving average, which is our 200-day moving average. It's very smooth and doesn't really react to our local or our very short-term price action. Then we have our 50-day moving average, which is much more representative of our local in that quick acting price action. As soon as we see our 50-day moving average cross over our 200-day moving average, that would be a classic or a textbook golden cross right through here. So we can kind of circle that moment in time. And then we have our death cross. That's going to be the opposite. That's when our 50-day moving average crosses back under our 200-day moving average. And that occurs right through here. Now, first, let's try to identify a good strategy based on these crossovers. So the basic or the most kind of intuitive strategy would be whenever we see that crossover, let's go ahead and buy. Whenever we see our death cross, let's go ahead and sell. So how would that work out? Where would our buy area be? So as soon as we see that crossover right through here, our buy area would be right there at close to an average of $174. This is way back in time, way back in 2019 for Ether, $174 Ether. Oh my Lord. Right through here. And then you would go ahead and sell whenever we see that death cross. But where is that death cross align with? It aligns with the price right through there, right? An average of 172 as well. And we actually see this very often where if you classically interpret, from the textbook, our moving average or our death cross or our golden cross in terms of as soon as we see it, we open up our trade. As soon as we see a golden cross, open up a long side trade. As soon as we see a death cross, sell out of our long side trade or open up a short side trade. It doesn't really work out. That's the exact same price level. And I've seen this too many times to count. This is because, or why this doesn't work is because the death cross, the golden cross, moving averages, convergent, moving average convergences, all of this in general, the entire moving average indicator is a lagging indicator. So what would a actual strategy work, or how would an actual strategy be successful with a lagging indicator? Well, it's going to rely on not just the convergences themselves. So we say this a lot of the time in this live stream. You shouldn't be using just a single indicator, or even, two examples of the same indicator, two moving averages, as the entirety of the basis of your position outline or your thesis. It shouldn't be the entire reason you're opening up the trade. You need to be supported by price action itself. So you would say, all right, how would we actually open up a good strategy for this? So you'd say, as soon as we see that golden cross, we kind of get that alert. We say, all right, we're looking at a bullish signal for the intermediate to long term for Ether to US dollar at right around April 19th. And so we start to do a little bit of technical analysis in that particular area. So now that we've seen that, we say, all right, maybe we should wait for a nice higher high. Again, you can use your Donchian channels for this, but if you're going to do it based on closes, it's not as helpful. This is going to be our topside resistance based on closes at close to 182.51. So you'd say, based on the trading, based on the trend following strategy, you'd say once we see a close above this level by at least a couple percentage points, we're going to open up alongside trade, and that's plenty, 4.34%. So you would be opening up your trade once we saw this close right through here, and I'll zoom in a lot for this. Once we see a close above this topside resistance, after we've seen our golden cross through here, so lagging indicator, we're going to see a bull trend. Maybe not right now, maybe not at this exact level, but possibly 10, 15, 20, 30 days later. And that's what we end up seeing. Probably, we can measure that real quick. So from the exact crossover to whenever we actually saw our confirmation was 22 whole days. So it wasn't immediate in the slightest. Once we do see that confirmation, you open up your trade. Once we do see that close, it does act as a confirmation. Right through here, you open up your buy target, or you just open up your long side trade at right around $190. And then you completely ignore the death cross part of it. That is my personal strategy for using golden crosses, is you ignore the counterpart. So you wouldn't say, all right, we have a long open at 191 and I'm going to close that position out. I'm going to liquidate myself, or liquidate that position at whenever we see our death cross, because you would end up with a net loss, closing out at close to $179. Not a terrible loss, but it's still a loss. So what I would do in this situation is just use regular technical and chart analysis for your sell targets, and then use our indicators themselves, that golden cross itself, for an alert for your buy signal. So you use it as an alert, say, all right, now that we've seen that golden cross, I'm going to keep a very close eye on Ether to US dollar. You wait until you see that confirmation. You use some regular chart analysis based on our price action, not based on the indicator. We say, all right, we've got good resistance based on our previous highs or previous closes at close to $182. If we can see a close above that level, we use the trend following strategy. We see that close at close to $190, and you open up your long side trade. And now you go ahead and set sell targets based on previous price action, but not on our indicators, not waiting for that death cross. Maybe you use a trend-based fib extension, or just a regular Fibonacci retracement from our long-term price analysis or our long-term price action to determine where to actually set that sell target. You could just set it at plus 10, plus 20, plus 30%, ladder those sell targets up. How high do we end up traveling? We travel very high on this, and that's whenever we see our death or our golden cross working out very well. So in this situation, maybe you say, all right, I'll set a sell target, or you just build an entire trading system off of golden crosses, waiting for confirmation based on local price action, then setting sell targets at plus 15, and then plus 30, and then plus 45%, laddered all the way up, and moving your stop loss up along the way. So it's kind of a compound version or a reductionary but compound version of between the trend following strategy and moving average convergences. So I really hope, yes, I have been showing this. AVAX chart. Let me add this real quick. Do these golden crosses work on lower time frames? They can, but it's not the textbook strategy. So the textbook strategy says on the daily candlestick time frame. Now, if you zoom, let's say you have the NASDAQ, and you can do this on the weekly candlestick time frame or even the monthly candlestick time frame, which would be extremely extreme. I don't think the monthly would even work for the NASDAQ, even if you had, 50 years of price action. I don't think you would get enough inputs. But I would stick with the daily for something like Bitcoin. If you're zooming in, then you're not working with as much like you can't depend on it as much as you would on the daily candlestick time frame. So it's just something you have to try to work with. Can the combination of MA and EMA be done? Yet again, they can all work together and they can all have trading systems built out of, a combination of the SMA and an EMA, or a WMA and an EMA, or two WMAs or two EMAs. You just have to continue to test those. And I haven't personally tested enough of those, or I haven't tested every single combination, or, wrote everything down for those. I've just tried MAs and combinations of those. I have tried a few EMAs and combinations of those, SMAs and combinations, but to be completely honest, I don't remember how those worked out. And if I'm not using them right now, if I haven't developed a system out of them, they probably didn't work out too well. But AVAX, so we'll do that in just a few minutes. As we get to our next slide, it looks like we're about 30 minutes in. Let's speed this up. Hopefully we learn enough from that. We won't even do an example for the death cross situation, but just flip it for a short side trade. Let's move into and get through the rest of this. So market makers, I'm trying to remember who asked about market makers last time. Wish I remember. Was it Hopium Jesus? Maybe it was the first one in here. So let's see. What's the best indicator to combine with Donchian channel indicator? So I don't use too many indicators on my charts themselves. Most of the time, if I am going to have multiple indicators, it's going to be with volume. So I'd say that's the best answer, is with volume. Now you could add a couple other moving averages. You could add, I wouldn't add something too hectic like an Ichimoku or a Bollinger Band to it, because it does kind of give the same data points, not the exact same data points as Bollinger Bands, but the same general sentiment, which is volatility and squeezing and expanding of volatility. So I'd say probably just volume based on my experience. But yet again, I've only been working with Donchian channels for 2 months. So maybe a couple weeks down the line, I'll be able to get back to you. I'll found some other indicator that works really well. Hey, Y present. How's it going? Congratulations. The big winner. Hey, Y, the luckiest man in the universe. Yes, market makers. All right, cool. Now, I am not a finance major, so I can't give a super technical or expert definition of market makers, but I have read a few books about finance and I understand the general idea of what a market maker is. So just understand this is my best definition of a market maker based on kind of the reference that I have. So first and foremost, market makers are liquidity providers. And I would like to say one more thing. You don't have to have a complete understanding of a lot of the mechanisms of finance themselves or things like market makers to understand how they work for cryptocurrency charts or how they actually affect you as a trader. If you have a good definition, like a good basic explanation, that's kind of all you need, because that's all that's going to affect you as a trader, or just somebody that uses an exchange, because that's where we're going to see the effect of a market maker. But first and foremost, market makers are liquidity providers. Basically, they have money, they have cash, and they give it to an exchange, or they lend it to an exchange, similar to somebody with a lot of money that would lend money to a bank or lend money to a hedge fund, or provide liquidity for whatever they're doing. So in this case, related to cryptocurrency, most of the time we're going to see market makers lending money to an exchange. We're not talking about automated market makers or AMMs or anything like that, anything out of DeFi. That the market maker did that. Oh, okay. I can actually answer that pretty well. And but let me go through this slide really quick. I can kind of debunk the boogeyman part. So they ensure that when you open up your favorite trading pair, so let's say AMP to US dollar, AMP to Bitcoin, it's like, who's trading AMP to Bitcoin? Maybe me. Whenever you open up that pair, they ensure that there's somebody willing to buy your asset at that price or sell the asset near the market price. So basically, just understand that whenever you are either buying or selling a coin on a major exchange, most of the time, I'm not sure on the exact percentage, but I'd say it's a very large majority of the time you're going to be selling to or buying from a market maker or a liquidity provider, somebody that has maybe $500 million worth of Bitcoin or $500 million worth of US dollar tether, and they get a little bit of profit based on every single order that is made on the exchange using their liquidity. So market makers, they're actually for-profit liquidity providers. I'm sure there's a few non-for-profit liquidity providers out there. I haven't identified any yet. And they actually create income based on the spread. So the spread would be the difference between the bid price and the ask price. So if you open up your exchange and you see that you can only buy Bitcoin for $49,000 and or you can only sell Bitcoin for $49,000, but you can buy Bitcoin for $49,100. The spread wouldn't be that much in actuality, but just imagine this as an example. That would mean that the difference between those two is $100, and we have a $100 spread for every single trade. The market makers themselves are catching a little bit of profit on the spread or on the difference between our bid price and our ask price. So most of the time, the bid price and the ask price will not be exactly the same. It'll never be exactly the same, actually, but most of the time it won't be entirely super close together. There'll be a little tiny bit of profit. It might be something like 0.01%. But the market maker itself is going to make a little bit of profit on that spread every single time. And let's say there's 500,000 orders that go through that order book in one day. They're making 0.01% times 500,000 to actually make a pretty penny at the end of the day, a lot of the times depending on those two variables. So the spread itself and the number of trades that go through that particular pair. So how does this actually affect traders? Well, we don't really notice a lot of the times because it's kind of been happening for a long period of time. We don't usually see markets without market makers. Now, yes, sometimes there will be DeFi markets where you don't actually see those, but it's going to be much more rare than using a standard exchange like Bybit, Binance, Coinbase. Those will all have market makers. The market makers will improve consistency and reliability within exchanges' order books. So whenever you need to buy AMP to Bitcoin, there's always somebody that's going to sell it to you. Whenever you need to sell it, there's always somebody that needs to buy it from you at a reasonable price, kind of localized to our market price. So let's say AMP to US dollar. I don't know why I keep using AMP as if it's this super low market cap coin. It's actually decently big. So let's say you're buying Ape Musk balloon coin, and it only has 500,000 in 24-hour volume, which is it's pretty low these days, but it has a very low 24-hour volume. The market maker, or as long as there is a market maker providing liquidity to that pair itself, you're going to make sure that you can buy AMP, or what do I say, AMP Musk balloon whatever coin. You make sure that you're buying it very close to whatever the ticker price is, so whatever the current market price is. So if there wasn't a market maker and there wasn't enough liquidity, there were very few people either buying or selling, then you might see a market price of $1, but you might actually end up having to buy, let's say you buy $1,000 worth, you might actually end up having to buy at $1.10, so a little bit further from our current market price. So MMs assist like peer-to-peer. They're not necessarily like peer-to-peer, but they are an automated, very complex version of that. So a market maker won't, I know I'm probably kind of diluting your question. I know you wouldn't say, or that you probably aren't saying that they're individually buying and selling each time, but it's, yes, kind of like peer-to-peer, but very automated, very high-scaled, very like an intelligent version, like a very intelligent algorithmic version of a peer-to-peer market, if that makes sense. But that's kind of what an exchange is, except it's the market makers providing liquidity. The exchanges are separate from that. They have their own liquidity pools. Yes, in some ways they are like peer-to-peer, and in terms of the actual structure, just a much more complicated version. And with a lot more factors, a lot more people to go through than a regular peer-to-peer. You're not buying directly from the person. So market makers drastically speed up order fills and reduce the spread between the bids and the asks. So like I said, you're going to be able to buy your coin or sell your coin at a very similar, very close price to our current market price, rather than selling at plus 10% versus our market price or something insane. So other than that, they do speed up order fills, so it might take a long time if there are not market makers. If there's not enough liquidity, it might take 2 hours for your order to fill, for your order to return to that price, or to bounce back and to actually have enough volume and liquidity to fill at that price. Versus a liquidity provider will speed that process up a lot. So modern market makers, white bear market maker like such as adding a liquidity pool on Uniswap or PancakeSwap. So yeah, you can kind of be a very small time market maker by adding a little bit of liquidity to an AMM or to just a general liquidity pool. So you can kind of be a market maker yourself. But whenever people are referring to market makers, like Moonman said, a lot of the times they're thinking of them as some boogeyman or as some Wall Street guru, some I don't want to get into conspiracy theories, but yeah, a lot of people think that there's some conspiratorial big man. Are the market makers the ones responsible for sudden price pumps or dumps? I wouldn't say so. I wouldn't say so. The market makers, they're not trying to manipulate the market. A lot of times they're not buying and selling. They're just providing liquidity for people that are buying and selling. Let's do a giveaway before we continue. That's a great idea, Andy. It's a great idea. So just to finish out this slide, modern market makers require advanced algorithms and knowledgeable analysts to carefully balance the capital percentage for markets that will provide liquidity to and at what prices. So you can get very deep and very technical into this, and I try to watch some videos in terms of the technicality of market makers themselves and like how much they make on every single order for every single spread, and it's just way too complicated to try to understand. So basically, they're very smart people that are going to be determining how much of that overall liquidity pool they're going to be inputting or they're going to be adding to each individual pair. They're going to, how much they're going to be buying at a certain price or selling at a certain price. A lot of it is automated, and people a lot smarter than us are looking at those. Well, aren't they losing money if the price is going out of the direction where a lot of people bought from them? So that is something that like immediately goes into it, or immediately that's like the first question that one would ask. That's why they get into shorts and dump price back to get out of bad positions. So they're going to be making money on pretty much every single order. It's not like they buy 100,000 Bitcoin at $25,000 and they're going to try to push the price up. They're not market movers. They're liquidity providers. I think the way it's phrased, market makers, can be a little bit, how do you say it? Not dishonest, but it can be like deceiving. By saying market maker, you think, all right, well, they're the ones that are moving the price. They're not moving the price. They're providing liquidity. They're basically acting as a middleman for whenever somebody's trying to buy or sell. So it's going to be those buyers or sellers, whether they're retail or institutional. Institutional sellers probably won't be selling on a regular exchange. They'll probably be selling OTC. They'll probably be selling on something with a lot of liquidity. But those retail traders, they're going to be the ones in terms of overall sentiment of all the retail traders and even the professional traders and even some of those smaller institutions. The overall sentiment, the overall average is what's going to be moving the price, not the market makers. The market makers simply act as the middleman and provide liquidity. I've read quite a few interviews with big traders going all the way back to stock market fund, or the original stock market before we saw derivatives, all the way until commodities markets, until futures markets, and everything that modernized trading up to computerized trading. And the general consensus, because I've had this question as well, is there some big guy, is there some big institution, some whatever, without getting into conspiracies, is there somebody that's really like controlling the market and saying, all right, we're dumping this market, raising this market? Yes, that'll happen very rarely, but those type of people do not have the power. The market makes itself, is just kind of the general consensus. The market, there's too many players involved for one person. Even if somebody has $1 billion, if they're dumping into a market like Bitcoin, or if they're dumping into any large stock fund market, any large individual stock, the market will balance itself out very quickly. So they can try to dump the price. And this is what happened with, who was it? It was a Dallas-based family that was trying to buy up all of the silver. They own the Kansas City Chiefs now. I'm trying to remember the story. The Hunt family. They tried to buy up all of the silver, but even though they had billions and billions of dollars and they were borrowing money and they were collecting capital, the market itself, the existing market, wouldn't allow that, and it ended up balancing itself out, actually working in the opposite way. So basically, the markets themselves are too liquid in terms of global markets, not necessarily some super small cryptocurrency or some super small market cap coin or pair, but any global market, something like Bitcoin itself, Ether itself, any of the top 10, probably down to the top 50 cryptocurrencies. There's too much global influence for there to be one single market maker. Now, yes, there are probably very rare cases, like something 3 years ago, there were documents that went around about Doge manipulators, but yet again, this was a much smaller market. Market makers, more like market manipulators. That's the exact opposite of what I was saying. Let's get into a giveaway before we get too deep into is a market maker an actual market manipulator. Let's do a giveaway and let's come back around to this before we go into, we'll talk about Tom Baldwin. Maybe he has some insight on market makers. I'm talking about day trade moves. Isn't that possible? Yes, but it's not going to be enough to actually affect the market. But yet again, all of the reading I've done about, is there actual manipulation enough to move the market? It's all about stocks, futures, commodities, and even those back in the 80s with those smaller market caps due to inflation and our current market caps for cryptocurrencies. Is it relevant? Do we have small enough markets for there to be manipulation? I can't confirm. I cannot confirm. I don't have access to all of this information. I only have access to to everything I read about. So let's do a giveaway. Hopefully you guys remember how to enter. So we're going to share the tab real quick. So to enter the giveaway, you're going to want to have either your Telegram or your Discord name. Also, you want to make sure that you are at least in the Bybit Telegram or the Bybit Discord. That is how we can actually distribute the rewards to you to get your Bybit user ID. Go ahead, and I'm going to present it real quick, and I'm going to open up submissions. So you're going to want to go to, let's open voting. So right now you can go to menti.com and you can type in this code 42030331, and you're going to want to type in your username and then -Telegram or -Discord. And we're going to give it maybe 5 minutes. Perfect. People are already doing it very correctly. Thank you. This is a nice stream. I have someone to discuss this with finally. Thank you very much. I appreciate the questions. As much as, I'm sorry I don't have all the answers, is basically, I would like to. But, does anybody? Maybe those experts that we've been reading about each week. The Paul Tudor Jones. I bet Paul Tudor Jones has a really good answer for, do market makers actually have any influence on the market? Classically, textbook example. This will be kind of the last thing I say about it. Classically, textbook market makers shouldn't have an influence on the movement of prices. They're just providing liquidity. Can they? Can the people that have enough money to be market makers, do they have the ability to move the price and be market manipulators? I don't have an answer for that. This is a trading stream, not a. Never mind. All right, we got 11 people in so far. Let's see if we can beat our record of, what is our record for how many people have tried to win? I think it was 20 or 21, or maybe 16. So let's see if no, it was definitely more than 16, or like 20 or 21. So we're at 13. Let's give in maybe 2 or 3 more minutes. While we are doing these giveaways, let's do both right now. Let's do both right now. While we're doing these, I currently have 1 to US dollar tether and AVAX to US dollar tether. For the waiting list for doing some chart and technical analysis, if anybody has any other suggestions for trading pairs, they can even be Bitcoin pairs or an ETH pair. They don't have to be US dollar or US dollar tether. If anybody has any pairs, go ahead and drop them in the comments, and we'll do some analysis in just a few minutes, maybe 5-10 minutes out once we're done with these giveaways. So let's give it right around 1 or 2 more minutes. We got 14 people in, trying to beat that record. It really is such great odds. If you can join into these streams each week, it's really good odds to win some US dollar tether. Oh, I guess I haven't said how much ETH US dollar. All right. I guess I haven't said how much you can win. So you can win $50 per giveaway, $50 US dollar tether per giveaway. So it would be 50 for this one. And then we'll do one more. So everybody will have one more chance. Yes, you can win both. And it has happened. Our guy, Hey Y, was 2 weeks back, won both of the 50 US dollar tether giveaways, which is just, he's a lucky guy. I don't know how he does it. 16 people. All right, we'll give it 30 more seconds, and let's go ahead and close out this giveaway. So let's do this. Give it 30 more seconds, 20 more seconds. Again, any more suggestions for chart analysis? We'll probably get to 3 or 4 charts by the end of the stream. And again, if anybody knows Ace Tylene or Oh My Broski, if you're friends with them, let them know to reach out to us on reach out to me or Kilo on either the Bybit Discord or the Bybit Telegram, because you guys did win, but you're not in the Bybit Discord or Telegram, or the names themselves are incorrect. They're not an actual Telegram name. So please come back to the live stream so we can get you your rewards. So let's go ahead and close out the voting in 5, 4, 3, 2, 1. And now what I'm going to do is go over to the wheel of names. Let me collect all of this data real quick. And then we're going to make sure it's nice and random. Let's exit out. Download. Hope everybody's having a good weekend. I know a lot of people are kind of, I guess, because I'm in the U.S., we like to say international, but from countries all over the world. So let's go ahead and export. But I always forget that people are all over the world. People are in different time zones. It might be early in the morning for you guys. All right, so thank you so much for your mindset sharing. Well, if that one wins, I'll show you guys. Somebody submitted a funny answer. You're Olumide Broski. Go ahead and reach out, or no, join either the Bybit Discord or Bybit Telegram. Olumide Broski. Or you submitted a Telegram, so make sure to join the Bybit Telegram. There should be a link in the description. Join the Bybit Telegram and reach out to both me at Brandon Zayat and Kilo at Kilo. So we can collect your user ID. Haven't received the giveaway though. Aomide. I'm a little bit confused. It does take a few weeks to actually between winning and getting that distribution. So let's go ahead and do this one. So thanks so much for sharing your mindsets. I'm gonna have to delete that one unless somebody tells me, you know, right now that is their Discord name. But well, we can just do it, and if it wins, then we'll redo it. That'll be fun. All right, so we're gonna go ahead and spin. Make sure that's everybody. Yeah, that's 16. So this is for $50 or $50 US tether, which should be worth $50. All right, at King Zitty. King Zitty, because you didn't put Telegram or Discord, go ahead and let me know in the YouTube chat. At King Zitty, let me know in the YouTube chat if that is your Telegram or your Discord name. You'll definitely reach out. Sweet, sweet, sweet. You're on my missing in action list, my MIA list. You and Ace Tylene. So I'm glad we're getting you those rewards. So King Zitty, let me know. That is your Discord or your Telegram. And then we're going to go right into the second giveaway. So everybody's going to get 2 chances. So I'm going to clear it out. You're going to do the exact same thing. Actually, is there anybody in the chat that didn't get to enter? Let me know now. Otherwise, I'll just re-roll. Anybody in the chat that didn't get to enter? Let me know now. And do make sure that you are putting dash Telegram or dash Discord, or that you're in chat after and you can let me know. Just makes it a little bit easier. Otherwise, we're going to reach out to you, or we're going to check both Discord and Telegram. So it looks like everybody, we've got the same pool of people. So we're gonna do it one more time. So I'm going to close this. Because I'm not removing, that does mean that King Zeddy could win again. I think that's only fair, because Haywire won twice, that everybody gets that chance. Just very even odds. Let's do it one more time. It's either going to be Haywire or King Zeddy. Nope. Oh, or Oluwaz. Andy. Oh, man. Okay. At Blacklist 178, congratulations on the $50 US tether giveaway. Let me know in chat if that is your Telegram or your Discord name. That'll make it all be very helpful. Ooh. All right. Well, let's see. King Zitty and Blacklist, do let me know by the end of the stream if that's your Telegram or Discord. Let's go ahead and finish out this lecture real quick, and then let's do some chart and technical analysis. I'm going to make it really quick for the chart and technical analysis, or for the for the lecture itself. So let's move over real quick. So I'm just going to read straight through this, talking about a master trader who was kind of not necessarily an expert whenever he started, but one of the earliest people in terms of one of the largest liquidity providers, one of the largest individual traders on the trading floor for the futures markets for T-bonds. I'm Haywire, haven't received the giveaway yet though. So it can take up to 20 business days to receive that. We have a process of verifying the names, and then there's a system to actually distribute. So congratulations to all the winners, but it does take quite a while to actually receive those rewards, but you will receive them. So just please be patient for that, and kind of expect that there'll be at least 20 business days. So Tom Baldwin, at the time of this interview in 1992, Baldwin acted as the single largest individual trader in the T-bonds futures markets, trading up to $2 billion in face value per day, which is the same as what entire institutions were doing. So this is one single guy trading $2 billion, not necessarily $2 billion orders, but cumulatively $2 billion in T-bonds futures orders per day, kind of at his peak. He relies on an aggressive technical scalping strategy. So this is definitely something that I don't have a lot of experience in, scalping itself. But a lot of people will ask about, and a lot of people have very successful strategies for, which is he focuses on a majority of his trading capital towards that scalping strategy. I think he says like at least 90%, then 10% in a general trend following strategy. So some of his most relevant axioms, just some good quotes before we get into our chart analysis. Number one, he was asked about the average retail trader and what do they do wrong? What makes them not succeed? And he said they trade too much. They don't pick their spots selectively enough. So they don't pick their coins or their trades or their entries or their exits selectively enough. When they see the market moving, they want to be in on the action. They're FOMOing into trades. So they end up forcing the trade rather than waiting patiently. Patience is an important trait many people don't have. So there's like 4 different lessons in this very single quote. You could say that they're his 4 kind of tenets of what a retail trader does wrong. First, they trade too much, they trade too often. Maybe he's also saying that they trade with too much capital per trade. They don't pick their spots selectively enough. So not putting enough time or enough effort into selecting those entry points, those exit points, the price that you're actually buying or selling your coin at. When they see the market moving, they want to be in on the action. They're FOMOing in. It doesn't just apply to cryptocurrency just because it's such a common thing that people say, FOMO for crypto. It was definitely applicable to every single market before crypto as well. When people see the copper market shooting up 20% in a day, people are going to FOMO into that, especially retail traders. So they end up forcing their trade rather than waiting patiently, not waiting for that exact buy target, but just FOMOing in because our price moves up 5 or 10% and not waiting for that exact price or buy target they were waiting for on their trade outline or from their thesis. And so basically patience is an important trait that many people don't have. When he was asked what separates the 1% or the highly successful traders, so basically whenever he says highly successful, that 1% of traders, people that can make, I'm trying to remember what the exact numbers, he said like people on a trading floor that will make over $1 million in the first 2 or 3 years. So highly successful, kind of the cream of the crop of traders, independent traders, individual traders. What separates them from the other 99% or just general traders? And he says it is a lot of hard work for one. It's perseverance. You have to love to do it. Also in our business, you have to have a total disregard for money. You can't trade for money. This is one of the most interesting things I learned from this interview with Tom Baldwin was he does like to separate the money from the trading. Everything is based on a system. Everything is based on, he's separating the numbers themselves from the capital, from the money. He's not thinking about, all right, well, if these 2 trades succeed, then I'll have enough to buy this house. Or if I go up 500% on this portfolio, then I can buy this car, or I'll have this much money. I want to make $100,000 this year from trading. He ignores that completely and he just follows the system. This is something that definitely separates himself in terms of all the interviews with top traders I've read about. I trade for money though. Me too, man. I know. I mean, this guy definitely is the most unique trader in terms of his relationship with money, the emotions associated with trading, how he separates the capital from his system. I mean, he's really just kind of a robot whenever it comes to systematic trading, and it does makes sense in terms of from the scalping side. So from the scalping side, it may not be as advantageous to think about it, or may actually detract from your profitability if you only think about the money, because the trades themselves are so specific. So instead of like a normal long side trade, he's scalping, $2 billion in trading volume, in face volume throughout the day. So I think there's a little bit of a disconnect in terms of scale, in terms of the actual spreads he's making for King's City, in terms of the actual spreads he's making for each individual trade versus a regular long or short side trade that we would be making as retail or even professional traders. King's City, was that your Telegram or your Discord name? You did win the giveaway. Congratulations. I'm not sure if you just checked back in. Let me know if that was your Telegram or your Discord. Also, Blacklist178. But that is the end of today's lecture, this week's lecture of Trading Mindset number 8. We did our US dollar tether spot giveaway. Let's go ahead and do some chart requests and examples. I think let's go ahead and do one to US dollar, then we'll do AVAX to US dollar, then we'll do ETH to US dollar. And then if we have any more time, we'll find out. Let's do these 3 first, and then still you can submit your pair requests and we will do those either today or next week. All right, so that's Telegram. Last person, last couple missing in actions, Blacklist178 and Ace Tylene. You are in the live stream, let us know and reach out to us. So actually, let's make it larger because I know it can be hard to see. Let's do it like this. And first, let's do one to US dollar tether. So let's go ahead and switch over. And let's take off our, well, we can leave our moving averages on. Maybe we'll find a good example of a golden or a death cross. Let's find one real quick. There it is. Oh, wow. How much price action do we have for this? Not much. No, we got a decent amount on the daily. So we actually don't have 200 periods, which is why we don't see our 200-day moving average. We do not have 200 days worth of price action on our chart. So maybe we will move over to, let's see how many, let's do one real quick. Let's see if we can find one with a lot of history. KuCoin might have some history. That's one ledger. Let's just check real quick. This has more price action. Okay. This just acts as a little bit better of a chart. Is that the 11.6? Yeah. So it's nice and congruent. Just gives us a little bit more price action history. Actually, a ton more price action history. And all the way back to August of 2019. So this is what we're going to use. Let's go ahead and zoom in. Actually, we can put those moving averages back on. I wouldn't use those really, or necessarily on this chart, most likely. Okay, they're not terrible. Our crossovers. They're a little bit sloppy, but so was all of our price action back here whenever we had a topside shadow of, let's go ahead and measure that. 17,000%. This doesn't sound right. This must be like a technical issue. Unless, like, what was the volume back then? It wasn't a crazy, I mean, it was 1.3 cents. This is the logarithmic scale. So if we go to the regular, kind of our lesson from last week. Last week, did we talk about the logarithmic scale? You can see how sometimes it can be extremely useful in terms of actually being able to view our price action. So we would have to zoom in like 50 more times to see any of that price action or for it to be scaled at all. So see how much we have to zoom, but because it's a factor of 10x, so this is all right around a penny. These are all right around, 7, 8, 9, 10 cents. But if we change it to the logarithmic scale, it's much easier to see, especially for that, that long-term price action. So probably could have used this chart last week when explaining log versus the arithmetic scale. But let's go ahead and actually take our moving averages off. Although we have seen a death cross technically, I'm not going to use that for this current chart. So we're gonna base everything on the price action that we can see without indicators. Just to start, maybe we'll add some indicators in a minute. Maybe some Donchian channels. We'll try that. So first, we're going to try to find base support based on our breakout area. So this intermediate term, yeah, I'd call that intermediate term bear trend. Intermediate term bull trend all the way up to here. Is that a double top? Yes. All the way up to here, this general area, come back down, another intermediate term bear trend or correction from this bull trend. So for our most previous bull trend, let's go ahead and identify Where's our breakout area? Let's go ahead and move down, move down, move down. So on the daily, we might move to the weekly, see if there's something better, because there are a few too many options here. I'd say there's a couple different areas that we're kind of choosing between. Let's reset our price scale. Let's see if it's better on this time frame. Okay, it's not terrible. Something like that, or because we have our, it's not necessarily a tweezer. But yeah, it's going to be two different levels. Again, it's not going to be relevant to our current price action, so it's not super important where we actually place these levels, but we're just doing this for to make sure everything's correct, even if it's not currently relevant. So that's going to be from the weekly. We're going to move into the daily and see how those look. Okay. It's not terrible, but there's just not, it's not perfect. Okay. I'm not really sure about this one so far. That's tough. It's just very sloppy. Very sloppy for one, for our previous breakout area, which isn't great. Personally, I probably wouldn't trade based on this area if I can't find at least one really good level. So we're gonna not necessarily ignore that, but we're gonna hope we don't have to use those levels in terms of any type of sell targets. We would probably try to avoid or just go higher than those towards the short side. We would try to not have to interact with that area personally. Towards the top side, we do have that double top. It's not going to be relevant at the moment because we're at 11.6 cents, and that area was close to 38, but we might as well draw it. There's our top side resistance for that overall trading range, but yet again, we have to zoom in a lot to get to relevant price action. And let's see what we're looking at so far. I'm going to bring this down slowly. That's actually a really nice area. Breakout area, support hold, and then back to resistance. So that's really nice. I like that much better than that previous area. So this is our breakout area through here, held as support for our bottom side closes and our bottom side shadows. We did see penetration, but the bottom side shadows did start to align as we got closer to this kind of the, how would you say it, for this formation to complete. Touch through here, touch through here, touches through here, all nice and dandy. So that's going to be a really good level at 17.3 cents, but yet again, not entirely relevant just yet. We would need to move up quite a bit to return to that level. Now, anything for our current price action, not great that we've already seen a lower low through here, so we might have to wait a little bit for that new low if we are going to be counting lower lows, which we will most likely have to do. We are already counting lower highs. So for the top side, first high, second lower high, third lower high, and that's going to give us a complete first low, second lower, or first lower low. And then we're just waiting for some new price action, but we do see that tightening of volatility. And so what we're most likely going to be looking for is that new lower low, but building a strategy or trading system off that wouldn't be perfect with our current price action right around 4%. So what we may need to see is we may need to base this off closes purely. It's going to be, sorry, I know sometimes it's very hard to see these charts. It might be easier for me, but a little bit harder on the stream. So based on our closes, it looks like we are actually seeing some, we're not seeing the volume for that though. This is a hard chart. Who suggested 1 to US dollar tether? Whenever a chart is this like not immediately obvious for a position, I tend to just move to the next chart. But we want to complete this for posterity. So we're going to hold this through here, hopefully. That'll give us some indication towards the downside. That would be what we're looking for. Again, our bottom side shadows. I personally wouldn't trade this at the moment, but that's a tough one. Who suggested that? That Scamwick though. Who said, I don't know. Scamwick is like, it's a term that I've never really become familiar with until these last few months. Is that super common always? Big shout out to Brandon. Not super easy to talk nonstop for 1 hour. Yeah, usually after about 50 minutes, I start to kind of like slur my words and mumble because I do get out of breath. But we got to go through these charts because I'm curious as well. Maybe, no, I'm not going to do it after. I'm not going to come back next week and do this analysis. I'm going to do it right now. All right. So what can we do? We move into the shorter term. That's all we can do. Move into the shorter term. Whenever the daily chart is too sloppy, it's too rough, it's going to be even sloppier, but it's going to be a shorter term trade, and we'll be able to ignore a little bit more of that price action that we don't like. So that's what we're looking at. In terms of the top side, I still like that, right around 12.6. Bottom side should be fine, but we're actually going to move it a little bit lower through there, be a little bit more conservative. And that's a good trading range. I'm comfortable with this. There's even some shorter term price action that looks pretty nice. Something through there for probably the 1 or the 2 hour. The 4 hour, right? Yeah. So we actually do have some nice price levels as we move into the shorter time frames. And this is what we're looking at right now in terms of both the downside and the breakout side. Couple close confirmations. Let's measure these real quick. And we don't have any sell targets for the short side yet. So that's, yeah, 2.74. I'd wait for confirmation through both of these with a close above, but to make sure, let's go ahead and measure that again and see. That's a tough one. That's a whipsaw. That's a 3.5% whipsaw. Maybe this chart just isn't for me right now. Maybe there's one strategy I used to use where I wait for not our current low, but our current high. But whenever we're seeing these lower highs, wait for the previous high, which we wouldn't be a large stretch. We wouldn't have to wait around a lot. It'd be 1.7, 2.05%. Those are still tradable numbers. I don't know how I feel about that though. That wouldn't be terrible. Just to be not super conservative, but just waiting for something that we feel a little bit more comfortable with. Again, being a little bit more patient on this trade. Maybe I should listen to the lecture I just spoke about. Some of those axioms I just spoke about. Be a little bit more patient and wait for price action above right around 13 cents. And that's my final answer for this chart. And then towards the short side, we're in no man's land below these levels. We're going to need some good percentage-based price action, 2.68, 4.96. Again, just waiting for that lower low and maybe try to get something super short term. Whoever suggested one, thank you for that chart. Next, AVAX to US dollar tether. Sorry, they're usually a lot more straightforward than that. It's a confusing chart. Did we talk about AVAX last time? Because I usually don't draw diagonal support or resistances unless I'm kind of trying to show trend. So maybe we did talk about AVAX last time. But we'll do it again. We'll see if there's any good updates. We're going to pull these off. Maybe I was just explaining a trend. I'm not sure. Let's go back to the weekly real quick and see if... Where are these lines coming from? Were they moved? Sometimes they move around as you're moving between charts. Actually, not terrible through here. This might need to move down just slightly. Well, yeah, it's fine through here. Again, not going to be relevant just yet. Well, it might be, depending on. That's 73 to 83. So let's first get a nice little trading range, some local support and resistance. First is going to be through here. That's going to be very local, so we don't have any alignment back through here. We have a tiny bit at this, and we'll bring it all the way back to there. I don't think it's going to have as much significance as a regular line that moves back that far historically. That's going to be our most local resistance. Our local support is going to be right through there at our local low for these closes. Make that yellow. It's green. Make that yellow, and then let's move out to the... move into the 4 hour. Let's see how that looks. Still looking good. For our breakout area, we have seen a close below that level, but definitely not enough. Right around 0.4%. Definitely not significant just yet. terms of these areas through here, for the top side of the trading range, we've seen closes at plus 0.59%. Again, not significant. You need to see at least probably 1.5 to 2% above those levels. We move a little bit higher through here. This all actually looks pretty good. Now, if we were going to draw this or create an outline for a shorter term trade, I'd probably bring the support down just a little bit, because we actually wouldn't have to wait for a percentage-based close. We could just wait for a close above that level. Well, no, then that ruins our alignment. Let's keep that up there for now. And then maybe we use that as a second confirmation. So towards the short side, let's see if there's any good targets. Should we even be considering the short side? Somewhat going out of order. Well, not really. Go to our targets next. But before we've kind of cleared our confirmation, this is fine. We can kind of bounce around. Sometimes you go, all right, well, this looks like a decent confirmation. Let's go and check out our sell targets. And if there are no relevant sell targets, if it wouldn't be worth it at all, then we could ignore the entire chart and move on to the next pair without even fully kind of fleshing out those confirmations. And that might be the situation for this one. No, we'll bring that lower. Let's first measure that. 3.19. Not perfect for a spot trade, but with a little bit of margin, that might look really nice. We're going to try to keep that above our low through here. Keep it above this area through here. But yet again, we still need to figure out some good confirmations, because if we don't have good confirmations, we have no good probability that we'll travel to that level. And we've seen those closes. Everything was based on the daily, wasn't it? Yes, we'll move back there. I think it's all going to depend on this close. If we form a close below this local low, so our close through here at right around 74.24, if we close below there, but only by a couple percentage points, now is it going to align? We have to wait for that close, because what we're looking for is any type of support hold through this area based on closes, but this hasn't closed yet. It's just, we've got 6 hours left. That's kind of throwing me off. So that looks all right. Let's focus back on the long side at the at the moment until we see that daily candlestick close, which is going to be another 6 hours. So nothing could really be confirmed in terms of even drawing a confirmation level for the short side. So back towards the long side, what are we looking for? We're looking at decent levels through here. We're going to set one right through there. And we actually should be fine in terms of almost ignoring this level through here, because we've got two good levels. We wait for closes above both. We'll be right on 80.96, and then we go ahead and measure towards the long side. Where's our first area of resistance? That's 2.12, 2.37%. It's a little bit too short and a little bit too short term. If we go towards the mix of the short and intermediate term, we can come up higher. Not much yet again. Come up a little bit higher. We're getting into a little bit more dangerous territory in terms of actually hitting some type of support or resistance. And I'd say the max would be close to there, right around 4.16%. We want to beat out other traders. 3.91%. So that's 84.135. Really a short-term trade, I'd still call it. Right through there. And what we're really trying to do is filter through a lot of the mess that we're seeing from our 4-hour chart. No. I'd separate that into two solid targets. Get another difficult chart. This is why we usually want to bounce around between the charts. So right around 2.86% and 3.85. Actually, I want to bring this a little bit lower. So definitely not, I wouldn't say worth it on the spot side if you're spot trading this. Wait for these two confirmations, wait for a close above, and right around a 2.80 and a 3.91. But it would be nice and short term, I'd say. So could be viable. We just need to see those confirmations. Toward the short side, it's really too messy at the moment. Let's do some ETH to US dollar tether in just a moment. Is there a thing called brain transfer? You said that last time, and I don't think there is. Thank you. That's a nice compliment, though. Please do ETH inverse perpetual. I can take a look at that. Where's the next support in Bitcoin? Let's go ahead. Let's do ETH first. Let's do ETH spot, and then we'll do the perpetual. So let's find that first. So we are running out of time. I'm not sure I'll be able to do all of those, but we will. I'll create the list for next week as well. So first, let's do ETH to US dollar tether spot. I'm getting a phone call. That's okay. So we're at 29.59. Let's zoom out to the weekly first. That's how I like to start. We've got a good amount of price action. It's all relevant at the moment. You know, all of this goes back to like 400 bucks. So that's really all we need, which is kind of crazy to think about. This is the only relevant price action for Ether. Whenever you have a chart with multiple years of historical price action, you start to think, all right, well, all of that, you know, that historical price action from 2018 is going to be relevant, but most of the time it's not. So this is actually a little bit better. So none of this is going to be relevant at the moment. I think we should do something closer to the short to intermediate term for an active trade rather than something closer to the long term. This is what we have for the daily, or actually we're not going to use anything. Phone call's over. We're not going to use anything from the weekly right now. Moving into the daily, zoom in through here. Start to move into our local price action, which I like better. We're actually getting a little bit through here, a little bit of alignment. Let's do it based on closes. Looks really nice. Yeah, almost acting as an inflection. That's 50% and then 50%. So we can measure this. 18.3%, and then measure it again. The top side, 19.28. Perfect inflection level, or our 50% level, right around halfway through our bull move through here. That should have some good relevance in terms of continuation of this retracement. Actually, let's just draw a fib retracement for this one. We're going to draw it a few different ways. Let's see, what should we do first? We can just do a fib. Let's find, I have not used a fib retracement in weeks, actually. Really been focusing on our horizontal support and resistance flips. So let's go from, we'll try it a few different ways. Let's go from breakout to close first. That looks okay. Let's go from shadow to shadow real quick. I don't like that as much. Let's go from bottom side close to top side close. I'm going to zoom in too. It's going to be difficult to see. So basically what we're doing is we're trying it every combination of inputs. Let's go back to our breakout to our close, and that's usually what I prefer because it gives us good levels for our closes. So basically for our fib retracements, a lot of the time, depending on how you draw it, you're going to get different good levels that'll act. So how do I say that better? If you draw it based on full extension to full extension, sometimes it reacts really well for our closes in terms of our actual retracement levels. Sometimes if you draw it based on close to close, you get good levels for extensions. But in this case, we're going to draw it based on our breakout to our top side close, and we get good levels for closes. So you just have to play with it, draw it a few different times. And we're actually going to use this for a start or a basis of our support. So actually that's going to be based on, that's not even based on our closes, it's based on our shadows, see? And then we're going to take it off the chart. So that's what we have at the moment in terms of confirmation based on closes at close to 29.73, confirmation based on shadows at close to 29.37. And we are really looking at the short side at the moment in terms of relevancy. Towards the long side, we need to see some good price action above our current pattern, which is currently a horizontal trading range, and a nice one at that. But we have to wait for this close through here in terms of any type of short side trade, as well as a return to our trading range, which would be nice. It would be nice to trade some bounces, some short-term stuff. I don't know, 4.59%, 4.77%, which means realistically you'd be making like 3.5% on that trade, minus fees. So 2.5% to 3%, depending on your exchange. And that actually looks really nice. So let's go ahead and draw some sell targets for the intermediate term breakdown. Actually, let's throw that fib extend or the fib retracement back up real quick. Let's see if there's any alignment below these levels. And this is what we have in terms of any level, any relevant level. Be this previous shadow through here, and then our bottom side shadow through here. Not a lot of information. Very quick movement from both the bull and the bear side. So we go back to previous circumstances in which we've traveled between 2937 and 2770. It doesn't need to be in the same direction. So basically anytime we move, I can actually draw a box for this. Anytime we've moved within these two price levels, we go back and we look at, how would you say it, like your acceleration, how much time we spent. So very quick price movement, very quick move between these two levels through here, very quick through here. We actually did form some nice resistance, some breakout resistance through here, but that aligns with that top side. So that's where we get good confirmation at 29.35. But between these two levels, very quick price movement through here, quick through here, quick through here, quick through here. We're only seeing support and resistance on either the bottom bounds or the top bounds. Basically confirms that these two levels are very nice for both a support and resistance. So we're going to draw it as a resistance through here, and then we're going to keep it, or a support through here, excuse me, and then we're going to move it up. So we're going to move this and try to beat out those other traders. Where do we move it to? First, we want to make sure we're above this shadow through here. So that's kind of what we're basing everything on. And then our closes through here, we're going to move it a tiny bit higher than that. And I think that's just fine. I don't think we need to be any more conservative than that. And that's basically our outline. So closes below these two levels. Moving down, that is a 4.64% spread. We beat out those other traders. We account for fees, and you're looking at maybe a 4% profit for spot. For margin, all depends on your leverage. Kilo is here. Alert us whenever you... Oh man, okay. Lots of comments. AXS against Tether for Kilo on the next stream. Not holding any AXS. I can do some AXS next time. 40 to 69 to 86. Anytime Bitcoin wrecks my long position, the market will super bullish. That's a good rule of thumb. Alert us when you'll open your next long from now on. Bought AXS at 65. What is it at now? Is Kilo an AXS fan or plays the game? Axia Infinity. I've never played it. I think I've looked into playing it, but I was, you know, I do like playing games, but for when the buy-in price is like $1,000 or $2,000, and it's kind of all based on, I guess it's kind of like a gambling game. And if I'm playing games, I like to keep money out of it. I guess when you're trading all day, you kind of try to find hobbies in which money isn't very involved. All right, so we've done AVAX, we've done one, we've done ETH US dollar tether. Let's continue this list. I think that's going to be the rest, or that's going to be the conclusion of the stream, but I'm going to make sure to write down all of these requests. So we're actually going to do the ETH inverse perpetual. And what was next? Bitcoin. And then AXS. We're going to do all these next week. Any more than that? GMT. Gala. Okay. I think that's all of the requests that we have so far. This is, I think, the longest stream that I've done so far. These are supposed to be 1 hour. And I believe the first 2 or 3 were 1 hour. And the rest have been like 1 hour and 20. But it's only because I'm having fun with you guys. And I just kind of get caught up in the chart analysis. But we have a good outline for ETH to US dollar tether. We did some nice but very confusing analysis of 1 to US dollar tether. Not as equally confusing for AVAX as we moved into the shorter term time frames, but man, that one chart really threw me off. Most of the time when you encounter a situation like that, you should move from the chart immediately, go move to your other favorite coins, your other any other pair you're looking at. Because when it throws you off like that and everything looks confusing and nothing looks right, it might honestly throw off your analysis for the next trades. So I'd like to thank you guys so much for joining in yet again. I am very happy with how these live streams have been going and how you guys have been joining in for every single one. A few of these guys I'd like to thank, Oluwaz, Andy, all of our giveaway winners, everybody that's joining. or attempting to win for those giveaways. Even if you haven't won yet, I will say that based on the number of people participating, you have some pretty good chances. So come back each week, make sure to participate in those giveaways, and you should have a pretty good probability of winning. You know, nothing is actually enjoyed this session. Oh, thank you very much. Thanks for the stream, guys. Thanks for joining in. But yet again, what was those last announcements? Ace Tylene, if you're out there somewhere, anywhere in the world, please reach out to us on either Telegram or Discord. I think I'm going to give it one more week. So I think it's been 3 weeks that you've been missing in action. My man, Ace Tylene. We're going to have to give your reward away if it's, 2 months out and we don't get any answer, unfortunately. But please reach out to us, as well as Blacklist 178 if you're in the stream. I'll stick around for a couple more minutes waiting for a comment of Telegram or Discord. Otherwise, we'll reach out to you on both. But you are the winner for today's live stream. If you do ever win, or anybody that has currently won, it does take right around, I'd estimate it at a month for those rewards to come in. So just kind of, if you win, don't expect them to come in immediately. It'll be a nice surprise about a month down the line. But thank you guys so much. I'm going to close this one out at an hour and a half. Go ahead and drop any chart requests in the Discord. So on crypto-beat, that channel on Bybit Discord, you can drop your chart request, and I will check that before the stream next time and get your request on the list. But thank you guys so much. Have a wonderful weekend, a wonderful Friday or Saturday, wherever you are in the world. I will be doing this stream next week as well. It'll be a lot of fun. And those Crypto Beat episodes are coming back. Season 2 is returning on Monday. So check that out. Thank you guys so much. Have a great weekend and good luck trading this week. See you guys.